The market's current enigma unfolds as a captivating mystery. It defies the expected signals of a looming downturn, with people slowly shaking off their crash fears. This shift in sentiment isn't without its reasons. Each month brings eager anticipation, as both individuals and investors hope for relief. But as time marches on, they're left astounded by home prices soaring to unforeseen heights. What emerges is an unparalleled, almost surreal real estate landscape defined by mind-bending supply constraints. But before we dive in, please like this video and follow our channel, as it helps us a lot. Witnessing the evolution of a new home market is nothing short of breathtaking. In the past, it was gospel that brand new, sleek homes commanded a hefty premium over their aging counterparts. But today, this age-old belief is crumbling before our eyes, defying conventional wisdom and leaving us all scratching our heads. It's as if the rulebook on consumer behavior has been tossed out the window, and the intriguing case in point here involves none other than Warren Buffett, one of the world's most renowned investors, whose actions shed light on this fascinating shift. Warren Buffett, the ultimate financial wizard who knows how to dodge those pesky financial bubbles, right? Well, guess what? He recently did something that had everyone talking. His powerhouse company, Berkshire Hathaway, has made some serious moves by investing big in three major publicly traded home builders: D.R. Horton, Lennar, and Ryan Homes. Now here's the kicker. Buffett's known for playing the long game and making safe bets. But this time, he's thrown a curveball. It got most folks in the housing market scratching their heads. Why would the world's most respected investor double down on home builders in the middle of what many folks are calling a housing bubble? Quite the head-scratcher, isn't it? Adding to the intrigue, these home builder stocks, such as D.R. Horton, have already seen remarkable increases, nearly doubling from their 2020 highs. This implies that Buffett is not investing in distressed companies. Rather, it suggests that Berkshire Hathaway sees significant potential for further growth in the sector, possibly extending into a prosperous bull run for years to come. To understand the significance of Buffett's move, we have to take a step back to the year 2020. This was the year when interest rates and home prices embarked on a rapid upward trajectory. This phenomenon triggered what was commonly referred to as the lock-in effect. Essentially, individuals who had the ability to refinance or secure low mortgage rates chose to hold on to their existing real estate positions. This decision, while rational, had an unintended consequence. It contributed to a severe shortage in the inventory of homes available for sale. The new home builders astutely seized this opportunity. Instead of raising prices significantly to maintain the typical premium associated with new homes, they adopted a different strategy, capturing market share. According to Redfin analysis, new construction homes now constitute 1/3 of homes available for sale, a substantial increase from the approximately 14% observed before the pandemic. This transformation has made new homes a more appealing option for buyers, particularly with incentives such as low interest rate offers from companies like D.R. Horton. Across the United States, it often doesn't make financial sense to purchase an old home. The costs associated with renovations and upgrades can be exorbitant. In contrast, new homes offer modern features and require minimal additional investment. As a result, the new home market has experienced significant growth. And this transformation has spurred Warren Buffett's unexpected investment. Now the pressing question is, where is this all headed? If the housing crash is indeed looming, why would Warren Buffett invest in home builders whose stocks have already surged over 300% since 2020? To unravel the mystery, we must delve deeper into the rationale behind Buffett's move. Buffett's bet implies a belief in the sustained demand for new homes and the enduring tightness of the housing inventory. This outlook suggests that the inventory situation will remain challenging for years to come. To appreciate this perspective fully, we must examine the current state of housing inventory in the United States. As of the latest data available, the inventory of homes available for sale in the United States stands at 492,000. This figure represents a 10% decrease compared to the previous year. While there has been a slight uptick in inventory in recent weeks, it remains far from the pre-2020 levels. Some experts are beginning to argue that this tight inventory situation could become the new norm. One critical factor contributing to this predicament is the presence of thousands of potential buyers who are biding their time on the sidelines. They are poised to enter the market as soon as mortgage rates drop to more reasonable levels. Below this group, there are even more potential buyers who are ready to make a move when prices experience a slight dip. Over the past 3 years, this growing cohort of patient buyers has created a reserved demand, which functions as a buffer against any significant market crash. Essentially, this group of individuals keeps the market propped up, and this is why many experts now believe that the current market turbulence may persist, with residential real estate continuing to prosper. Why is this situation unfolding in such a manner? Why would inventory remain constrained? And why would prices remain relatively stable if the housing crash were indeed looming? To answer this, we must consider several factors that are shaping the housing market landscape. First and foremost, it is crucial to understand that inventory essentially dictates prices in the housing market. To illustrate this point, let's examine the last 5 to 6 years of housing inventory trends. In 2022, we witnessed one of the most dramatic swings in housing inventory in recent history. From the lowest point to the highest, we saw an astonishing 161% increase in available homes for sale. It's important to note that replicating such a massive inventory increase is nearly impossible due to base effects. However, for the sake of analysis, let's assume that going forward, we somehow achieve a 161% annual inventory growth rate. Even under this unrealistically optimistic scenario, it would take over 2 years of robust inventory growth to reach the same levels observed in 2018, a year that was considered healthy for the housing market. However, a sustained 161% inventory growth rate is virtually unattainable. The inventory situation for housing in the United States appears to be challenging for the foreseeable future. If this continues, it explains why Warren Buffett has chosen to invest in some of the country's largest home builders. His investment suggests a belief in the housing market is unlikely to experience anything resembling the 2008 crash. A significant part of this belief is predicted on the assumption that inventory will remain tight for many years to come. Now, let's explore the implications of this unique market dynamic. What does it mean for various stakeholders, including home buyers, sellers, investors, and the broader economy? Home buyers are faced with a challenging landscape. While historically low interest rates make home ownership more affordable monthly, the competition for available homes is fierce. The limited inventory means that buyers must act quickly and often compete with multiple offers on the same property. This can drive up prices and make it difficult for some potential buyers to enter the market. Buyers may also need to adjust their expectations. With new construction becoming a more attractive option, especially with incentives like lower interest rates, buyers may need to consider newly built homes as a viable alternative to existing ones. Sellers, on the other hand, are in a favorable position. The tight inventory and high demand translate to a seller's market, where they have the upper hand in negotiations. This allows sellers to potentially secure higher selling prices and favorable terms. However, sellers should also be cautious not to overprice their properties. While they may have an advantage, an overly ambitious asking price can deter potential buyers. It's essential for sellers to work with real estate professionals who can provide accurate market insights and help set a competitive price. Investors, particularly those eyeing the real estate market, must adapt to the changing landscape. While the prospect of investing in residential real estate may seem attractive, it's essential to conduct thorough research and due diligence. Investors should carefully assess market conditions in their target areas, considering factors such as inventory levels, price trends, and the presence of new construction. They should also be mindful of potential regulatory changes that could impact the real estate market, such as changes in lending standards or tax policies. The housing market plays a significant role in the overall economy. It affects various industries, including construction, real estate services, and finance. A robust housing market can contribute to economic growth by creating jobs, increasing consumer spending, and driving demand for related goods and services. However, a market imbalance, such as the current tight inventory situation, can have ripple effects. It can lead to higher home prices, potentially pricing some individuals out of the market. Additionally, the high demand for new construction can strain the supply chain and labor market, impacting construction costs and timelines. So, in a nutshell, the housing market is this captivating puzzle, right? Take a look at legends like Warren Buffett making their moves. It's like a neon sign flashing, "Unique market ahead." To navigate this terrain, you've got to be more of a detective than a fortune teller. Sure, it doesn't play by the usual rules, but it's always shifting and transforming. And that means it's got surprises, both good and not so good, waiting around every corner. So, whether you're a homeowner, investor, or just curious about the market, you better bring your A game and be ready for a wild ride. If you found this discussion insightful, don't forget to like, share, and subscribe for more updates on the U.S. housing market and other critical topics. Your support helps us continue bringing you valuable insights. Thank you for joining us, and we'll see you in the next video.